Debt is like any other trap. Easy to get into, but hard enough to get out of. A quote from American humorist Josh Billings. There are many phrases and sayings describing debt as a significant source of stress and evil. And although they might be slightly exaggerated, it doesn't mean that these sayings are false. When you're trapped in the never ending clutches of debt, you may think there's no way to get out of it because the amount you have to pay off gets larger and larger over time. It is most likely that when you borrow money, there will be interest. Even though this is the case, the United States has almost $15 trillion in consumer debt, resulting in the average household debt being a little over $5,000. Although this doesn't mean that you should despair, I will tell you some good news that may change your views on this. First of all, change the mindset that all debt is bad, even if that's what you commonly think. After all, nobody likes paying credit card debts, car loans, and especially student debt. You might be wondering what makes these debts not so bad. Before you genuinely understand how debt can be a favorable thing, you should first examine those who are wealthy. People with wealth utilize debt as an opportunity to make more money. I know it might sound contradictory since debt is meant for those without cash. However, debt isn't how capitalism operates. You have to learn that debt can be an effective tool if you know how to utilize it correctly. Keep watching this video to guide you on how to effectively use debt and make a profit out of it. Don't forget to hit that like button and subscribe to our channel for more money related content. Now, let's dive into it. You may think that borrowing money is not a wise idea when starting your own business. But even though it sounds controversial, most of the trade is based on debt. Companies, primarily traditional ones, have used debt as their primary course of action. For example, you want to sell notebooks, which is a product that has been a constant demand due to the stationary needs of students and employees. Your course of action would hypothetically be to find a manufacturer from a factory in China that can produce the ideal kinds of notebooks with excellent quality for a reasonable price. You would then purchase bundles of these notebooks and ship them to the US to distribute them to your clients. However, in today's setting, this can now be done solely through online platforms like Alibaba, AliExpress, or DHgate to name a few, unless the type of product you need requires you to travel to the factories themselves. The silver lining is that you don't have to pay for the products upfront to have them. To find out how to, let me further explain. Starting from the early 2000s, China has become the world's largest manufacturer and is often referred to as the world's factory. Every year, they continue to grow and produce thousands of products for the world to use. And if you want to make these products easier to sell, you can reach out to these manufacturers and build trustful relationships with them. Afterward, they would be willing to loan their products to you in exchange that you will pay them back after a certain amount of time. The business operates that you sell the products in the US or any other part of the globe that you want to venture to. By borrowing these products, you are helping these manufacturers sell, and once you sell it for a slightly higher price, that's when you're going to make a profit. This strategy has been proven to be excellent, especially if you're hesitant to tie your money up in these transactions. So, reselling is undoubtedly a skill that is worth the time to thoroughly learn and master. Consider all the Chinese made products you've purchased or owned. Which one do you believe has the most potential of earning a profit through reselling? Comment down below your response to let us know your insights. To give you a situation of how this works, suppose you save, for example, about $200,000, which is a hefty amount in itself, but not at all enough to buy a property. In that case, you can work your way around that by searching for a different property that's in a faulty condition. Let's say this particular property costs around $500,000 and requires significant renovations. You can then go to your bank and get a mortgage loan by making a down payment of 20% or paying $100,000. And if you spend around 10% of the total cost of the house on renovation budget, or about 50K, you can return to the bank. However, you should refinance your mortgage this time around. When you initially acquired your mortgage, the worth of that property was only $500,000 because it was in horrible condition and nobody planned to stay there. But now that you've refurbished it, people want to rent it out. Therefore, the property value goes up to $700,000. If we look at the current situation, imagine you're going to get an 80% mortgage which results in 560,000. You'll pay 400,000 to the bank that gave you the first mortgage. On the other hand, 50,000 will be spent on the cost of renovation, which leaves you earning a profit of 110,000 by making use of debt. In addition, you'll now have a property that you may rent out to produce passive income and grow equity. Furthermore, you do not have to pay taxes because you have a mortgage, which is a fairly frequent technique among real estate investors. The third thing we'll discuss is hedge funds. Now, what exactly are hedge funds? Have you ever thought about how we usually try our best to predict which companies would be ideal to invest in by studying if they'll potentially grow or expand so that we too can earn? Hedge funds are the complete opposite of that. And instead, it's more on making money when a company's value goes down or even bankrupt. A probable example of this is the stock of Facebook, decreasing in value due to certain smartphone brands that will soon disable tracking online activities on social media apps to further prioritize the user's privacy. This in turn won't be good for Facebook. So you call your broker and ask to borrow a stock of Facebook from him that costs something like $100. You sell it on the open market for the same price. Now you gain back that $100. Now the question is, how are you going to return the single Facebook stock that you owe to your broker? You can wait a week or so, and if your predictions are correct and the Facebook stock price drops to $70, you use your current $100 to buy it, return it to your broker, and make a profit by pocketing the difference. In theory, it may sound simple, but it can be quite complex and full of risks when you apply it in real settings. There is always a chance that your prediction is wrong and the price doubles instead of declines, which will lose you even more money than you originally spent. When you purchase a stock with the intention of selling it, when it climbs, the most you can lose is the amount you invested. However, in shorting, this is not the case. If the price continues to grow, your losses will also continue to rise. Potentially, you can have an endless losses because of the stock price can increase exponentially. But if you have access to analysts that can work for you, this method can make you a fortune. Now, the last method I will share with you today is utilizing a credit score. It is a powerful tool that has helped nearly all successful entrepreneurs and businesses in various ways. If you have already established an effective business model, then borrowing money to finance a purchase order is the most common approach followed by almost every single business. It's a common misconception that all debt is bad, when in fact, debt can be good for you if it helps you build assets and generate income. Like credit card debt, some debts can be a burden because of the high interest rates attached to them. But if you want to reduce these rates, you need to limit the risk that lenders face when loaning you money. You can do this by having a good credit score and demonstrating your ability to pay them back in time. And that concludes this video. I hope you learned something new, and if you have any other ideas on today's topic, please share them in the comments section below. Don't forget to drop a like, subscribe, and turn on notifications so that you don't miss out on any of our new videos. See you at the next one.